Hi everyone, Ryan Jones here. Today I'm going to quickly show you how easy it is to uncover, find, create, and backtest day trading strategies. And I'm going to use two examples through quantum charts. And the first example is going to be in the Forex market. I have a 1 hour bar chart of the USD JAPY up, and I'm going to show a very simple day trading strategy that I uncovered in that market. And then I'm going to show you a 5 minute Google chart and an interesting couple of scenarios of what you can do with quantum charts that allows you to easily create day trading strategies. Okay, so I'm going to start off with the USD JAPY, and for time purposes, I already have everything on the screen. I'm not going to create it as you're watching, just simply because most of you have already seen the process and how easy it is to actually create a strategy. And if you haven't, I would strongly suggest that you go and take a look at a couple of the videos that I have already produced that show you the process of how easy it is to create a strategy using quantum charts. Of course, no programming is required of any kind whatsoever, not a single word. And what I've done here is, well, I'm going to give you a little bit of context here. I'm not going to spend a whole lot of time, but I saw this bar right here, and I saw how it was kind of interesting in how it related to the 8 bar moving average and a 40 bar moving average. And so I just began to look at that, and I clicked on the bar and I put a few of the conditions that were true with this bar in relation to the two moving averages into the strategy box. So the first one that I placed in there was that the moving average, the 8 bar moving average was less than the close, and then the 40 bar moving average was greater than the low of this bar. Okay, so we have an 8 bar that's less than the close and a 40 bar that is greater than the low. And you can see that by the 40 bar moving average value is greater than the low. And then the second one here is the close is greater than the highest close of the last 2 bars. So that was the other condition that I threw in there. So you can see here's the close of bar 1, here's the close of the previous bar. This close is greater than these two closes. And that was found by clicking on that. I simply clicked on the price action series in the complex category, and you can see that the close is greater than the previous two, or the highest close of the last 2 bars. That's that first condition. So drag that in there, and then I clicked on the run button, which was up here, and it went. Now this is a year's worth of data, a year's worth of intraday data, and I click on the report, and here's what popped up in the USD JAPY. Okay, so 48 times the market has dropped the following bar. 29 times the market has moved higher. So 62% of the time the market has moved down. 38% of the time the market has moved up 1 bar after this occurrence. So it's taking a look at all of the occurrences and then marking. Here's bar 1. This would be bar 2, bar 3. The average move higher 1 bar after was 8 pips. The average move lower was 13 pips. If you move to bar 2, it was 63% lower, and then bar 3, 65% lower. The average lower was 22 pips. The average higher was 19 pips. So right here we have a short-term strategy that's going. This is an hourly bar chart. So within the first 4 hours, this is probably the majority of the profit potential is there. You can hold on. As you can see, there is some room to hold on. The 40 pips lower, 55% of the time after 9 bars or 9 hours, whereas it's only 23 pips higher on average when it does move higher. So that's almost a 2-to-1 ratio of the size of move. So right here we've just very quickly uncovered a potential 1 bar trading opportunity to the downside in the USD JAPY. Okay, so that's very basic, very simple. Now I'm going to pull up the Google 5-minute bar chart. I'm going to go to the Google strategy that I've already created. And basically what I have here is I have a 3-bar pattern that I've created. And this is, again, a 5-minute bar chart. And the 3-bar pattern requires an inside bar for the first bar. And then within the next bar, this is within bars in the properties box over here, it says 1. So this next one has to occur immediately after the inside bar. The close has to be less than the previous low. And then that also has to be followed by another one, and that's within 1 bar, where the close has to be less than the previous low. So you have 2 consecutive lower closes closes that are below the previous low, which you can see is shaded in here. I've already applied this strategy. So it's an inside bar followed by two lower bars, and that's on a 5-minute Google bar chart. And the report shows a year's worth of data, and 132 times the market has moved up 1 bar after, 109 times it's moved down, 55% to 45%. The average move higher was 56 points, the average move lower was 60 points. And then you can just go on and see that there's just a very slight edge with that. Now let me show you some cool stuff that you can do with this. This really isn't showing a tremendous opportunity. It's only showing you maybe a slight normal bias to the upside when you have this particular 3-bar pattern. But with the intraday data, what you can do is you can come in here and you can say, okay, I'm going to click on that bar and I'm going to take a look at the time of that bar. And the time of that bar is 10:50. And so I can take one of these conditions and I can require that this pattern occur within a certain time period of the day. I can say between 2 time periods, I can say before a certain time or after a certain time. So here, I'm just going to throw this up there. I'm going to say the time has to be before 11. That's 11 Eastern is how the time is on the Google chart. So I just drug that in there just like that. I'm going to click on Run again. And immediately it is going to give us a report, and it's going to show us that if we incur the situation before 11 o'clock, and we hold on for 5 to 25 minutes, we see a potential buying opportunity here increase to 63% by an average of $1.42. Versus the percentage to the downside at only 37% by an average of only $1.03. So we have a higher percentage probability of moving up, and we have a degree, the degree that it moves higher is greater than the degree that it moves lower. Now, I also have percentages down here. And then I had some questions on this. Market hit 1/4% how many times? Market hit 0.5%, how many times? Market hit 0.75% how many times? Or a percent time here. So I have that down here, and if I scroll down, you can see that the market moved higher 1/4% within 4 bars almost half the time, where it was only 22% of the time where it moved lower by that amount. So it's looking at on a percent scale, kind of equalizes the entire time period, if you will, and you can see that immediately begins to be a bias to the upside within 2 bars. So it's 37% of the time you see the market move 1/4% higher by bar 1 and 20%. Here you have 14% 0.5% higher and only 5% 0.5% lower. If you move all the way over to the bar 4, you see it's 39 to 19 and then 42 to 19 at 1/4% higher. So that kind of gives you an idea of the degree of move, and kind of equalizes everything as far as the price is concerned. Some stocks, trading at 5 and it moves $1, that's a 20% move. Whereas if it's priced at 100 and it moves $1, that's a 1% move. So that's why this becomes important. Okay, so I can create time in there, or I can take that out, and I can come in here and say, okay, I only want to do this when the day is before the 5th day of the month, and this is a calendar month right here, so a calendar day. So I want to say, okay, this has to occur within the first 5 days of the month, and I don't want to look at anything beyond that. And then I'm going to click on Run. As I click on the report, is lo and behold, look at this. When that pattern occurs and it's within the first 5 days of the month, we're talking about a 73%. 73% of the time, the market moved higher by 63 cents, and 27% of the time, the market moved lower by 60 cents. So here we have a solid probability move to the upside. You can move this on out, and you can see up to 4 or 5 bars after it remains 72% by 92 cents and 28% down by an average of 98 cents. We can take a look at the percentage, and it's 33 to 11 and 11 to 3, and it's 14 to 6, 28 to 8. These are very, very powerful numbers. So here's a situation where an inside bar on a 5-minute bar chart, followed by 2 down bars occurring within the first 5 days of the month, and boom, you have a solid buying opportunity in Google. Now, how many stocks can you do that in? I mean, you've got a situation here that is very, very promising. So this is one stock on 1 year of data on a 5-minute bar chart. So there's just another very quick example. And by the way, I found both of these within about an hour, hour and a half of starting to play with the intraday stuff. So, once you start playing with it, it's only a matter of time before you start to find things. I will add to this. That's it for now, but I will add to the functionality of intraday strategies with future videos. I appreciate your time. I'd love to hear from you. If you have not filled out our survey, please click on one of the survey links and let us know your thoughts. I appreciate your time. Thank you.